This is Dave at Active Intel Investigations. Today we're going to talk about accounts receivable fraud. In most cases, we see fraud and theft in a company where it's obvious after it's already happened in accounts payable or money going out. Well, how can you steal money when money's coming in? Well, it starts with a diversion of the payment. When a check's coming in from a legitimate customer or client, that can happen where that payment is diverted. Any type of theft can happen in AR if unauthorized people in your company are allowed to clear a receivable record. So anybody who can clear a record, whether it be in sales, accounting, bookkeeping, maybe even marketing, that's going to create an opportunity where theft can occur through accounts receivable. So who can clear an AR? Are you sure that's all the list of people that can do it? Can your sales department clear, even with a discount to a customer? Maybe somebody owes $18,000 and you authorize sales department to give them a discount of a couple thousand. That's a way of clearing an AR. Anytime you're clearing a receivable debt, that's an opportunity for somebody to create theft. Is there other means of clearing it? Like we mentioned, credit. Maybe we can change the number of days that account is old, because sometimes that will trigger a response. Anytime you can clear something, that person has the opportunity to move that money elsewhere. If you can move a balance to another account, even if you can't clear it, that's another way of allowing a theft. Let's say you have the ability to move a debt from a receivable to payroll. This is a theft we saw recently. What they did on the payroll side was they racked up overtime for an employee, even though that employee didn't work. Well, that would have triggered a review of that employee's pay records. Well, before that was paid, they cleared that overtime as being paid. That created a debit. They moved that debit to a credit in the accounts receivable for a particular client. And then what they did was they diverted that receivable check from that client to the account of who? The person who had racked up the overtime. So by doing this four-step process, they actually transferred a couple $1,000s a month from a legitimate accounts receivable client into the personal account of an employee. Anytime money is moving, that's an opportunity for theft. So looking who can clear receivables or discount them or move them somewhere else is a way to make sure that nobody can use this method to steal money from your business.